Hey, what's going on, guys? All right, so today we're going to talk a little bit about investment real estate. This specific neighborhood that we're in is just a little bit south of Towson, Cedar Croft area. And Paige and I actually own a couple multifamilies on this block. This one down here, just had a tenant move out, so I'm going to go ahead and renovate that unit. I hadn't been in there in a year or two. Tenants have been in there, so going to go in, renovate that unit. So we'll talk a little bit about the inside of the unit. We're going to talk a little bit about monthly rental income if that's something you're interested in, and then I'm going to show you how to compute capitalization rate. Cap rate is what it's called, and cap rate is really important whenever you're thinking about buying, a multi-family house, because basically cap rate tells you your rate of return. So I'll go over that on the inside. We'll use the wall like I've done before. This one right here is it's a great unit. So this is multi-family. So there's one bedroom, one full bath on the main level with a family room, renovated kitchen, and then upstairs there's another one bedroom, one full bath. So we'll go ahead inside. I'll show you these. I'll tell you what these rent for, what they're worth, so on and so forth. So we'll pick back up inside. Okay, guys, back inside now. Do some little clips of what this is. These are nothing fancy. These are really just a retirement vehicle for Paige and I, and also, we're in real estate. We like to invest in real estate. So you'll see a little family room, one bedroom. So we'll get some shots of the bedroom. Really basic kitchen that's set up for one person. These are great units though. These are never hard to run out. Good location, good street. We'll put in some clips of the neighborhood too. So let me show you guys cap rate calculation. I think this is interesting, especially if you're ever thinking of having rental properties. You need to know how to do this, or else it just doesn't make sense. You don't know if you're making money. So I had to write this down on a piece of paper here. Cap rate calculation. So this is 2 units. One down here, one upstairs. So the first thing you want to do is look at your rental income. All right, so both of these units rent for $850 unit 1 downstairs, $850 unit 2 upstairs. Okay, so then we have our monthly rental income, $1,700, and then we're going to put that into an annual rental income, right? Because we need to look at income and expenses. So this building as a business, what have you, however you want to look at it, on an annual basis, $20,400 of income. Now, one thing too, when you're figuring out cap rate, you have to pretend that this is an all cash investment. That's the only way really to get the cap rate calculation. You can factor a mortgage in and mortgage payment and finances. It's a different equation. But again, today you're just trying to figure out rate of return, and for that, we assume no mortgage. Okay, so $20,400 is your annual income. You want to then look at your annual expenses. So for these, I'll tell you, and pretty much any owner of real estate, one of your big ones is going to be your taxes. This one's in the city, just barely, but just south of Stoneleigh in Cedar Croft. So I do have a higher tax bill. So taxes here, $2,200, annual taxes, repairs. These are the types of things that you do want to think about for your expenses, because you do have to maintain this. You're going to take an average of your expectation. I probably put about $1,000 into these, maybe a little less, but let's just say $1,000 for repairs. I have to have lead paint, Baltimore City inspections. That's about $500 a year. And then this is the one that people always miss, is vacancy. Sure, sometimes you have it rented for 12 months of the year, 2 years in a row, but most people, you're going to expect to have tenants turn. I use 8% vacancy, okay? So you take your annual rental income, multiply that times 8%. So vacancy I put on as an expense in the expense category, $1,632, okay? So you add all these up, total expenses, $5,432, you'll see right there. Okay, so now we're starting to get some math. We're starting to understand where we are with income and expenses. So you're going to take your income, $20,400, subtract that from your expenses, $5,432, and you're going to have this is called your net operating income for your rental unit. Okay, so net operating income, my math is all right here, $14,968. Okay, now that you have that, let's say that you have all of this information, you're looking to buy this building, you're an investor. you need to know what to pay. So let's say you paid $150,000. You were about to pay $150,000. Okay, let's say that's the value of this building. We're going to use that to figure out the cap rate. So $14,968, which is your annual income, divided by $150,000, and you would see that if you paid $150 grand for this building, you paid all cash, and it went as planned with expenses and income. 9.97% is your rate of return. 10% you would average it up to. So this would be a 10% cap. A 10 cap is what they would call it in commercial residential real estate investing. I think a 10 cap is pretty good. Most people like to see 7%, at least 8%, and in really tougher areas where you're dealing with crime and so forth, you might buy at a low price, knowing that it's a tough area, but you might have a higher cap. So you might see a 17, 18, 20% cap even. Chances are that could be in a dangerous area. So I hope this was informative. I hope you guys understand now how you get cap rate, how it's calculated, and enjoy some cool clips of this unit. So more videos to come.